African and Nigeria's equities market gained 0.72% last week, bringing the year-to-date performance to just over 30%. Muktar Mohammed, an analyst at Assar Investments, joins me now as we look into the performance of the equities markets here in Nigeria. Interesting times we're seeing for the equities, Muktar, over 30% up market year-to-date when you look at it. But I'd like you to speak on the performance we're seeing and how what we can expect going into the first quarter of next year.
Well, thank you, Ken. I'm not surprised with the performance we saw last week. We've seen the market rally, and we definitely need to be a lot of profit taking. But the difference in this profit taking this time is that we're seeing investors exiting some other stock that they think they've made a lot of profit in, going into highly fundamental strong stocks, especially from the banking sector. That we saw this volume, and mostly those banking stocks that very sure they will be paying dividends in the year end coming up, and especially first quarter of next year. So we'll see that continue to play out, and a lot of investors also who have been waiting on the windows that are taking profit during the bullish the bullish run that we experienced some months ago. They are beginning to come back to the market also, and we're beginning to see some maturity also in the bond sector and the treasury sectors. So most of those funds will also find their way into the equity market. And also, we shouldn't forget that we are beginning to see a little bit of stability in the exchange rate region. We might get that stability before the end of the year, and so we might begin to see the foreign investors begin to come in. And so if that play, if all these factors play, especially the factor of getting this foreign investor coming in, we might see one of the largest bullish run we've ever seen in the market, especially next year, first quarter of next year.
Because if you look at the past two years or thereabouts, in the first quarter, we always see the market kind of rally strongly, but how well it sustains that for the course of the year, that's going to be the key challenge.
Yeah. We'll see that. Sometimes when you see other things, because sometimes those stocks, those dividends are already priced into those stocks, and some investors decide that they will actually wait, and after the dividend have been paid before they will now begin to come into the market. Will we see those liquidity challenge like we used to see next year? Some time ago, I don't think we'll see that much, because unless there's an improvement, especially in the returns that we get in the treasury B sector or the bond sector or some of the fixed income instruments, if we don't have those returns, I don't think the market will suffer from those kind of liquidity challenge that they normally suffer at that time of the year.
But just looking at how the general environment and mood will be for investors and for the investment sentiment, we're seeing the second wave of the NSE campaign start today. We're seeing videos across the country where people are already kind of coming out in their numbers, though. For you, what are the implications for the economy for this and also on the markets?
It will be very, very bad. It's something that will do us no good if we have a second round of NSE protests. It's going to affect the microeconomy. It's going to affect the equity market, and again, it's going to affect every part of our life as a nation. I think the government should do all they need to do to make sure such things don't happen again, in terms of addressing some of the needs of the NSE protesters. Because what we're seeing now, after the incident that happened in Lekki Tollgate, there have not been any positive response from the government any longer as regards it. It's only a state like Lagos State that seems to be doing a lot of work. The federal government seems to be even taking sides when you see utterances that comes out from the high place, like the Inspector General of Police, and also last week, even if they say they have withdrawn that suit, that shows that it's lack of sincerity on the part of government. So I've been going to court to stop the judicial panel from sitting, even after agreeing that it's so. All these are what played into the mind of the protesters that are making them to think that they have to regather again, because they think the government think they play the fast one on them. So I think the government should be up to their responsibility, do what you ought to do. Those that should be tried for extrajudicial killing should be tried. Those that should be tried for every offense they committed as members of SARS should be brought publicly and be tried. And if we don't do that, if the second round of NSE protest comes in, it's going to be very, very difficult for us to recover. We are already in recession, and we are thinking of getting out of recession in the first quarter of next year, as well as second quarter of next year. So, but if we have this protest, we may have the longest recession we've ever seen in the history of this nation. And we mustn't forget that even if the vaccine is safe to be out, the vaccine is not getting to Africa anytime soon. And the NSAS protest can also create another round of surge in the COVID-19 pandemic. So the government needs to step up its game and make sure that they address the situation that's about to happen and don't let it happen at all.
All right, let's get back to the markets now and look at what we've seen play out here. Looking at some of the best performance this year sector-wise, we're seeing the NSE industrial goods taking pole position on that front, up about 50.6% year to date when you look at how things are playing out. But some other sectors which we would expect to be doing so good are not doing that well. When you look at the consumer good index, down about 4.5% year to date, and the NSE oil and gas down about 16% as the worst performer in the market. Though, for you, how should investors be playing in these sectors?
I think investors will still be wary of the consumer gas consumer section because we are now in a recession. There will be a lot of rebalancing. There will be a lot of how they're trying to readjust their spending because there will not be enough money to spend. Remember, the recession is coming. Price of goods are going up, and yet the earning capability of the average Nigerian has not gone up commensurate with the recession. Also, we expect that that sector will still not be able to withstand a lot of things this period. It will still that sector to perform poorly. For the oil and gas, I think we will see a gradual recovery from that sector, especially with the price of crude going almost at $50 per barrel, and the current deal between the OPEC and Russian allies also. I think that will help stabilize that space in the oil and gas sector, and we will not forget that the Nigerian government is saying we are fully deregulating that sector, and so that will create a lot of investment towards the sector. So I think for that we'll see those sectors, the oil and gas sector, recover next year. For the other sectors, like the banking sector, we expect them to play a very significant role in Nigeria getting out of recession. So that in turn will be shown in the bottom line of most of these financial company stocks. So I think for now, the three sectors I tell investors to look at. You look at the banking sector. If you want to look at the industrial sector, you need to look at the cement sector alone because there you will see a lot of infrastructural development going across the nation. And these cement companies are playing a pivot role in most of this reconstruction and most of this renovation and even construction of new routes and new terminals. And so we expect the industrial goods sector to continue to do very well, and the banking sector.
Right, definitely a lot to look out for as we look into the investment space in Nigeria, but quite a lot to look at. But still, the NSE-All Share Index still not updated yet today, but we definitely will find out how the market closed so far. Muktar Mohammed is an analyst at Assar Investments now.